Hello, everybody. My name is Justin, Business Development Manager here at Fullerton Markets. And our class is titled Understanding the Forex Market, aka the largest financial market in the world. So, without further ado, let us begin. So, I'm sure you guys have heard about Forex trading, you have some idea about it, but what is the Forex market specifically? What does this word Forex mean? Well, the word Forex is actually made up of two words. The first being foreign and the second being exchange. So we took the first three letters of foreign, F-O-R, and the first two letters of exchange. We put them together and we coined the term Forex. Okay? Now, earlier we talked about how it was the largest financial market in the world. But how big is it really? Later on, I'll be tackling and I'll be sharing with you guys how large the Forex market actually is. But before that, I want you all to take a look at the photo in front of you. Now, what do you see? What do you see? Basically, what you see is 10,000 US dollars in 100 bill form. Stack them up and they form 10,000 US dollars. Now, I'm not sure what country you are joining us from, but what can $10,000 buy in your country? A small car? Perhaps down payment on a larger car? Maybe a nice vacation? $10,000 is quite a large sum of money, right? But the Forex market is trading nowhere near this, which you guys will come to learn of later. Now, if we took 10 of those bundles and we stacked them up to create $100,000, that's roughly 10 bundles of $10,000, right? We can still count them. We can still visualize physically how much 100,000 US dollars is. And as you can see with the illustration here, 100,000 US dollars is slightly above this man's sneakers. So though $100,000 is a lot of money, currently it's still something that we can count, we can see, we can carry in one arm, right? But what if we bump that number up all the way to 1 billion US dollars, right? Not 1 million, 1 billion US dollars. Here's the thing. Out of all the people you know, how many of them actually have a billion US dollars? You might know more of the famous ones, right? But here's the thing. 1 billion US dollars can still be counted physically. You can still fit 1 billion US dollars in your house. Now, if you can see here, the illustration shows roughly 8 pallets. You know, if you've ever seen a pallet before, it is a wooden square that we use to transport items, right? You might have seen them at the grocery, you might have seen them at the pier, at the docks, but I'm sure you guys have seen a wooden pallet before. Now, if we took 8 pallets and we filled them with 100 US dollar bills, we can come up with $1 billion, right? But we can still physically see and count, we can still visualize how many paper bills that actually is. All right, but what if we take it one step higher and bumped it up from 1 billion to 1 trillion, right? From 1 billion to 1 trillion. The man from earlier is now a tiny speck with respect to the number of pallets that come up to 1 trillion US dollars. So if you can imagine how large this is, how many people do you know who has $1 trillion lying around? Probably not. Only countries have access to this kind of money, right? But $1 trillion is still, you know, we can still wrap our minds around it. You know, it might be 2 football fields, it might be 4 football fields long, but $1 trillion is quite a lot of money. All right. Do you think this is how much is being traded on the Forex markets on a day-to-day basis? Raise your hand. There's a small button here where you can raise your hand. Raise your hand if you think that 1 trillion US dollars is how much that is being traded in the Forex markets on a day-to-day basis. I'll give you a few seconds. Okay, we have a few people. Some people are typing. Thank you for the participation, but we are not just trading 1 trillion US dollars here in the Forex markets. We are actually trading more than 6 times this number. Every day, the Forex market is trading 6.5 trillion US dollars. Not billions, friends. 6.5 trillion US dollars. Now, if it's trading at 6.5 trillion, can we all agree that it is the largest financial market out there? Yes. Okay, yes, some people agree with me. Now, the next question is, how did we come up with this number? Did I just make up 6.5 trillion? Did I just say that, it's trading at 6.5, so it must be true? Fortunately, we don't have to do that, since every 3 years, this information is being prepared by the Bank of International Settlements. Every 3 years, they come out with a report and they tell us how much is being traded in the Forex markets. Every 3 years, guys. So if you want to see that report for yourself, it's just bis.org. Feel free to check it out. So 6.5 trillion a day, that's a lot of money. Even if you spent $1 million a day, how long would it take you to spend $6.5 trillion? Clear so far? Great. Now the next question is, since Forex is such a large market, where do we actually trade it? Well, we use something called the ECN, right? It's called the Electronic Communications Network. Now this allows us to trade it over the counter, meaning we can do it from, we can access it quite easily, right? Very easily. We can do it from the comforts of our home, as long as we have connection to the ECN. So remember that, guys. ECN means Electronic Communication Network. This is where all the market players, and later on I will be sharing with you guys who these market players are, but suffice it to say that we are included in this market players, in this this term. Let us move on. Now, the Forex market is open 24 hours a day, Monday to Friday. Now, I'm sure you guys have heard of the stock market, yes? Raise your hands if you've ever traded on the stock market, if you've ever heard of it. Okay, there are a few people. Well, in some countries, the stock market has limited trading hours. In a lot of countries, actually. For example, they might be trading from 9 a.m. to 5 p.m. only, after which you can no longer access the market. Now, this is a bit of a problem, since quite a lot of the people who, for a majority of the people in the world, they are holding jobs. Now, if you're holding a job, how can you access a very limited market that is only open from 9 to 5, and they may take breaks from time to time? Lunch break is an example. So you can't really, make adequate use of the trading time, since they're only open for a very short period. Unlike the Forex market, that is open 24 hours from Monday to Friday. Now, if you can imagine, let's say you just woke up, you check your charts, and you see a good opportunity. You're still in bed, you're in your pajamas, you haven't moved at all, you just check the chart right away. You can trade then and there if the market is open. Then and there you can do it. Now, let's say your day, the day progresses, and then you've gone to work, you've gotten home, you've had a shower, you've had a meal, you're resting, and then you suddenly think to yourself, hey, I want to check the markets. You open your phone, it's 2 a.m. You can still trade Forex at 2 a.m. as long as the market is open, as long as you are trading anywhere between Monday to Friday. It is open 24 hours a day. So if you can imagine how beneficial that is for people who are busy, for the people who are busy taking care of their children, for the people busy working, taking care of their business, or the people who like to live life and are actually quite active. You may not always be available to trade, but the moment that you get connected to the ECN, you can start trading thanks to this amazing 24-hour market. Clear so far? Let us move on. Now the next question is, why is it open 24 hours? What allows this to happen? Well, simply because the Forex market is traded on the internet. Now, I'm sure some of you guys here have seen, those movies where, really, really old movies, some around the 70s, 80s. Sometimes you would see somebody phone calling a person on the other end, and they'll say, hey, I want to buy, or I want to sell. And then on the other end, you see a room with a lot of computers, a lot of numbers, with a lot of red and green, and a whole bunch of people shouting over each other, buy, 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 sell, 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 while they are on their phones. That is the old way. That is how people used to trade before the advent of the internet. Before, you would have to call somebody through your landline at home or through a payphone. You have to memorize the number. You have to hope they actually answer before your trade is accepted. Now we can do all of this thanks to the internet. We no longer need to trade. We no longer need to call people. We can just trade, no problem. All right, the Forex market is traded on the internet. Now, all the market players around the world are connected via the ECN on the internet. All right, now who are some of these players, or the largest players out there? You have Citibank, Deutsche Bank, Credit Suisse, UBS, and Barclays. Now, I'm sure you've seen some of these in your country. I'm sure some of you have credit cards issued by Citibank, right? So these are the largest players that are trading Forex. They are the largest, and they keep everything running around, right? So we have the large players who are helping bridge the gap between the other players, and that also includes you and me and some smaller players, which we'll be talking about later. All right, since everyone is connected and since we are trading 24 hours, the reason why we can actually do this is because of overlapping time zones. Overlapping time zones, all right? Just because your country is at night doesn't mean another country out there is not, just starting their day. Due to the overlapping time zones, we actually start here, somewhere around New Zealand, Australia, Japan. Now, these markets are open and they're trading Forex. Now, if you trade Forex and they are open, you can trade no problem, all right? And as the day goes by, these countries have to get some sleep. They have to rest. Of course, we all do. But here's the thing. As these countries are closing shop, New Zealand, Australia, Japan, another market is opening. We are now moving into the Eurozone, right? Europe is opening, the UK is opening, some other markets are open, some other servers are open. Then we move towards the US. Now Europe might be going to sleep, the UK might be shutting off for the day. And now what is available would be the US. Once the US closes, since everything's overlapping, the New Zealand market will then start to open, Australia, and the cycle repeats itself Monday to Friday. So as you can see, it doesn't matter what time you trade, as long as you are trading within the open hour, within the trading days of Monday to Friday, you can trade Forex anytime you want. And thank goodness for the internet. All right, clear so far? Great. Now, the next question is, how is the Forex market traded? How do we actually do it? Well, before we get into that, we actually have to pair currencies, all right? Because to trade Forex, you have to trade them in pairs. If you see here, there is there is a currency pair listed as the euro versus the US dollar. On the left, we have the base currency. On the right, we have the quote currency. Remember that, guys. Left, base, right, quote. Forex is traded in pairs. Now, what are some of the major currency pairs out there? All right. We have the euro dollar, right? We have the British pound versus the US dollar, the dollar yen, the dollar Swiss. CHF stands for Switzerland. Now, here's some trivia for you guys. The reason why the Swiss franc is written as CHF is because when, when this was actually coined, it was not known as Switzerland at the time. It was known as the Confederation Helvetica, CH, Confederation Helvetica Franc. That is why it is listed as CHF, because I'm sure you guys have noticed the USD. The first two letters are UNS, which stands for the United States. GBP, Great Britain pound. EUR, the Eurozone, right? The AUD, Australian dollar. This CHF is the only one that does not follow this format, simply because when it was first coined, they were not known as Switzerland. So that's just some trivia for you guys. Okay, after USD CHF, we have the dollar CAD, the United States versus the Canadian dollar, Australia versus the US dollar, and the New Zealand dollar versus the US dollar. Now, these are the major currency pairs. There are 7 of them, right? These are the major currency pairs that are quite liquid and are widely traded. Now, there are a lot of currency pairs out there. These are the more exotic pairs. If we were to give them a name, they are called exotic pairs, right? Though they are being traded, they may not necessarily be traded a lot. That is why I believe it is really good to trade the major currency pairs, because they are much more reliable when we trade them. Now, who are the major players in the Forex market? First being the central banks. We listed quite a few of them earlier. Citibank, Deutsche Bank, Barclays, UBS, JP Morgan. These are some of the larger players. Central banks referring to the banks within the countries. After that, we have the commercial banks. These are the larger banks, Citibank, HSBC, and the like. Followed by the big importers and exporters, people who make a business out of importing and exporting. They can also move the Forex markets. Followed by hedge funds. These are companies that we invest our money in, right? They hedge, they do trading on our behalf. The others would be the business travelers and tourists, aka people who actually, go to another country. They exchange money from their currency to, let's say, the US dollar if they want to go to the US, and from there they spend the money, and then this is all part of Forex. And lastly, we have the individual traders, which is you and I. We are the individual traders who are trading Forex on our own. Okay, clear so far? These are the major players in the Forex market. Now, after learning about who is trading the Forex market, let us tackle a very important aspect of Forex trading, which is known as leverage. Now, I'm sure you guys have heard of the term leverage, right? You guys have heard of the term leverage before. And I'm sure some of you have been told that leveraged markets are quite risky, right? Raise your hand if you've been told that trading Forex is risky because it is leveraged. Raise your hand. Right, some people. Well, to give you guys an idea of leverage, right? Leverage is simply a tool that we use to trade more with less capital, all right? Trade more with less capital. Now, here's the thing. Leverage is a double-edged sword. On one hand, if you know how to use it, you can make it work for you. However, if you misuse leverage, it will come back to hurt you or to haunt you. All right? if, for example, if to give you an even better example, right? Let's take a cooking knife, all right? A cooking knife. And if I were to give the exact same knife to a chef and to a person who is cooking for the first time, I'm very sure that the person cooking for the first time will end up cutting themselves or will create some sort of accident with the knife. While the chef may not even have to look at whatever he's cutting and will be able to use the knife efficiently and well. Same thing with leverage. In the hands of somebody who knows what they're doing, leverage is very powerful. In the hands of someone who has no idea what leverage is or is just starting out, leverage could be detrimental to you. But in the end, leverage is just a tool. It is neither bad nor good. It is up to the person using it. Understand? Clear so far? Yes, thank you. Let us move on. Now, when we trade Forex, right, there is something known as a standard lot. Standard lot, this represents how much of a currency that we are actually trading, right? In order to actually trade one standard lot, we need money in our account to trade. But how much money do we need exactly? Well, it depends on leverage once again. All right, one standard lot is worth 100,000 US dollars. Not a lot of people have 100,000 US dollars laying around for them to use in their trading. However, there are some people out there who can take out 100,000 US dollars and trade. Now, for people like this, they might choose a leverage of 1:1, otherwise known as no leverage at all. Now, if you are not trading with any leverage, you would actually need 100,000 US dollars to trade one standard lot. Now, there are some people who can do this. There are a lot of people who cannot. There may be some people with $100,000 in the bank, but they may not be willing to use it for trading purposes, right? So without leverage, you need $100,000 to trade one lot. See? It's not really, it's not very accessible. It's not accessible to a lot of people out there. Thank goodness we have leverage. Now, what if I told you that instead of 1:1, we can actually go up to 1:100? Now, this is, we're using a leverage of 1:100, right? So all we have to do is divide 100,000 by 100. Doing so means that we only need 1,000 US dollars to trade one standard lot. Instead of having 100,000 US dollars, we only need to use $1,000 to trade one lot. Sound like a good deal? It is a very good deal. Because a lot of people can part with $1,000 to trade, right? Not a lot of people can use 100,000, but a lot of people can actually use $1,000 to trade. But what if we were to increase the leverage? We then increase it to 1:200. Same thing as earlier. Instead of 100,000, instead of 1,000, we now only need 500 US dollars in our account to trade one standard lot. So if you can see the power of leverage in the hands of somebody who knows how to use its power, to harness its power, it is very powerful. Clear so far? Let us move on. It was Archimedes, an old Greek philosopher, mathematician, who said, "Give me a lever long enough and a fulcrum on which to place it, and I shall move the world." What he is saying is, with enough leverage, he can actually move the world by himself. Think about that. With enough leverage, he can move the world. Same thing with trading. With enough leverage, you can trade more and more in the Forex markets. If you're a really good trader, this is very beneficial to you. Right, to summarize, when we have no leverage, we need 100,000 US dollars to trade one lot, which will be eating up 100% of our margin. Now, with 1:100, we would then need 1,000 US dollars. with 1 is to 500, we would then need $200. So what is the lesson here? Leverage is beneficial if you know how to wield it. So don't be afraid of trading leveraged markets. All you need to do is learn about leverage and know how to use it properly. There's a lot of information out there that you can make use of. All right, let us move on. Now, here are some common FX jargons that we come across when we trade Forex. The first being the major currency pairs, all right? We have the USD, which represents the United States, right? Their currency is known as the dollar. It has a nickname, all right? It's known as the buck, all right? So sometimes you hear movies, they're like, they're gonna buy something, how much would that be? They'll say it's $2, something like that. These are the nicknames that we give to the US dollar, followed by the Eurozone. The symbol is known as the euro, the EUR. The currency is known as the euro, and the nickname is just euro, followed by GBP, which represents the Great Britain pound. The nickname for this is cable. Because sometimes when you're reading about Forex online, you might hear that somebody, says, I'm trading cable buck, for example. That some people use these terms. Not everybody does, but just in case you do, the terms are here for you guys, right? Next, we have JPY, which represents the Japanese yen, otherwise known as the yen. The CHF, which represents the Swiss franc, otherwise known as a Swissy. The AUD, or the Australian dollar, otherwise known as the Aussie. NZD, New Zealand dollar, otherwise known as a Kiwi. And the CAD, which is for Canada, the Canadian dollar, otherwise known as a loonie, right? You might come across these terms. Now you know what they mean. All right, let us move on. Let's try to break down the currency pair itself. All right, on the left, we have the base currency, and on the right, we have the quote currency. Now, the base currency is the currency that we quote in relation to the counter currency. All right, base currency. Now, the counter quote currency, this is on the right side, which we put up against the base currency. Clear so far? Very easy. Left is base, right is quote. Okay. Now, the next term that you will be coming across is a pip or a pipette. Now, a pip is the smallest price change of a given exchange rate. Now, if you see here, we have the British pound versus the US dollar. You can see here the value is 1.35361. And on the right, the value is 1.35371. All right. 1.35361 on the left, 1.35371. Now, the change between the 6 and the 7 is 1 pip. All right, a pip is the smallest price change of a given exchange rate. Now, the next term that you guys might come across is the bid and the ask price, right? Now, the bid price is the price that the Forex market is willing to sell at, right? The ask price is the price that it's willing to buy at. Now, the ask price is higher than the bid price, right? So on the left, we have the bid. On the right, we have the ask. 1.0661 for the bid price, and 1.0664 for the ask. Now, another term that you will definitely come across is spread. Now, the spread is just the difference between the bid and the ask price. Difference between the bid and the ask, all right? So the 1.0661 and 1.0664 has a difference of 3 pips. That is known as the spread. That is known as the spread. Now, you guys will be hearing about spread a lot because a lot of people talk about spread, how high is the spread, how low is the spread, and this will directly affect your trading, all right? Because just because, let's say you open the trade, the spread is accounted in the trade and you might end up at a positive or a negative because of the spread. It might also be the determining factor of whether or not a trade is closed. So the spread is very important. All right, next we have lot sizes. Lot size represent the trading volume. Earlier we had an example with the leverage. We talked about one lot, but how many units is that? You know, how can we quantify that? Well, one standard lot is 100,000 units, followed by the mini lots, which is 10,000, and followed by the micro lots, which is at the 1,000, right? There are other ways to interpret this, but to keep it simple, standard, mini, and micro. The next thing that you guys will be coming across is margin. Margin is very important too when you are actually trading, because margin refers to the minimum amount of funds needed to enter a trade based on the leverage of the account. All right. With a standard lot of 100,000 units and a leverage of 1:100, the margin required to trade is 1,000 US dollars. Now, if we go to the mini lot at 50,000 with a leverage of 1:500, we would then need 100 US dollars. Now, if you're trading 70,000 units or rough 70,000 units, or this is a mini lot of 0.7, and you trade at a leverage of 1:100, you would then need 350 US dollars. So there is some calculation that goes into trading, but don't worry, since you are already trading on the platform, the platform does it for you. If you don't have enough margin, you will be prompted and informed that no, this trade cannot go through because your margin is insufficient. Then you can adjust accordingly. No need to calculate it by hand. The system does that for you. Okay? Clear so far? Great. Now, the other term that you might be coming across is used margin. Now, what is used margin? This refers to the amount of money kept aside by your broker so that your current trading positions can be kept open. So you have margin, right? Once you open the trade, a small percentage of that margin will be moved and it will be held by the broker to make sure that your trades are kept open. All right, used margin. You can see this, when you start trading. Followed by the margin level. Now, this is a simple formula for you to calculate margin level, right? Margin level is just the equity, the amount of money you have in your account, divided by the margin used multiplied by 100%. Now, this tells you how much of your margin is being used for this trade, okay? Now, these are the simple Forex trading terms that we have. Now, the question is, do you actually have to calculate all of these? The answer is depends. If you want to, feel free to do it. You don't have to calculate it at all, simply because the system does that for you. However, if you like to plan your trades ahead of time and would like to calculate, you can do that as well. And so, ladies and gentlemen, that has been our class. My name is Justin Bernabe, Business Development Manager at Fullerton Markets. I'd like to thank you all for joining me, and I look forward to seeing you all at our next class. Thank you all, and goodbye.